Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, in the new year, the main man of the hour, Mr. AJ Brown. How are we doing, AJ? Happy New Year. Happy 2026.
Oh, things are great here. Happy New Year to you, Sip.
We had a rainy one here, which is rare for Southern California, so I feel like the exuberance of the new year was a bit limited on my side of the world.
I wouldn't know. I was in bed by 10:45.
Right? And then I watched football all day for January 1st. However, today feels like the very first day where people are sitting back down in front of their screens. They're pulling up the markets. They're starting to assess what their next moves are going to be. What are your thoughts? Where do you want to begin today's show? Maybe just, S&P levels.
Well, even before that, I got to give kudos to the participants over at the Trading Trainer programs because, again, I think I said last week on Christmas Day, we had a session and I was thinking I'd show up and nobody would be there and I'd go home. And we wound up having record attendance on Christmas Day and wound up having like a 75-minute class. Yesterday was New Year's Day, and I was thinking, nobody's going to show up for this. And sure enough, again, record attendance, 90-minute class, just going through people's questions, going through people's thoughts. So I have to give kudos to the paid participants of Trading Trainers programs because they are engaged. But anyway, coming back to the broad market, like you asked about the S&P, I mean, this week has been categorized by risk off, right? But I'm not giving it too much credence, Sip, because it's just holiday volume, which means the real traders are coming back probably sometime next week. We'll use volume validation to verify when they actually come back. But yeah, last week was categorized by risk on. This week, risk off. It's a few extreme voices, a few extreme trader voices speaking loudly. So not really worried about it. More interested about what's coming for next week and for the first month of 2026, for that matter.
Yeah, so 6,800 on the S&P. We've got the storylines of inflation. We've got I don't know if you saw some of this Tesla news, but I'm seeing Tesla everywhere today in terms of them missing some sales numbers. What are you gonna be gauging? The start of next week. What are you looking at as a catalyst to, I guess the trend we should look for in January, because it seems as if we're not getting the Santa Claus rally.
No, we're really not. So the scoop is that I think that we're going to be moved by day-to-day news. I think that, for instance, this week we got a pending home sales report on Monday that kind of sparked some enthusiasm on Monday, only for it to fizzle out by the end of the day. It was actually stronger, saying that prices are actually inflating a little bit. People were worried about stagnation on their homes. I think that's still a valid worry, but this report that came out on Monday got some people excited. And then, of course, there was this Fed Open Market Committee meeting minutes, the minutes of the last meeting. Didn't surprise anybody. Basically, they know that the Fed is not going to probably be doing any policy changes for January. I mean, when we take a look at the kind of investor sentiment tool around the end of January Fed meeting, 85% of the people think there's not going to be any policy change at all. So I think the main thing folks are going to be looking at, Sip, they're going to be paying attention to, what is the latest bellwether? What are the tea leaves saying about employment and inflation? I think that's going to be the real driver. I think some of the stories behind the scenes is the whole AI story. Is it a bubble, or if it's a bubble, when will it burst? I think that that's going to be a topic, and I think there's an underlying, questioning by investors as to the quality of the data that we're getting, right? So I think that's going to be driving us in the month of January. I think for 2026, I think there's going to be just a lot of confusion and uncertainty in the US economy. So we're going to see a lot more sideways chop.
And for those who are maybe new to the show or new to the channel, and we've talked about this before, that makes the directional strategy a little bit less appealing, right? And so this is where premium selling or using some of the
Shines.
as like a counter to something that you may be having in your portfolio. Is January a good month for that? Because it seems like we're going to be trying to figure out what we're going to do, and that allows time to become kind of like the asset.
Yeah, absolutely. And not only that, January is usually the describer of what happens throughout the rest of the year. Whatever happens in the month of January. If January is an up month, then the year will probably be an up year. I mean, I think it's close to like 60 or 70% accuracy that that's true, but still people pay attention to what's happening in January. And so while we're trying to figure out what January has for us, and therefore what 2026 probably has for us, selling premium makes so much sense. I mean, I don't know if you can look at the scribbles on my screen when we take a look at the technicals of the S&P, but when you look at the scribbles on my screen, we were in an uptrend for about 6 months, starting in April, ending at the beginning of October. And then all of a sudden, we kind of capped out. And you can see that we've already had 4 different trend changes. These dotted lines are trend changes since the beginning of October. That's a lot of trend changes in just a quarter, in 3-month time frame. And you can see that we're, coming up and playing around with highs, but then coming back and testing lows. And so this is all very clear that we're in a sideways choppy market as investors try to figure out what's happening. And the best way to trade a sideways choppy market, like you alluded to, is selling options premium.
And so, for those that don't know how to do that, AJ's got a great workshop to educate you on that. And we'll be going through some examples in the show. But with the SPX kind of, pulling back a little bit, but as we've, the rainbow chart is something that you looks like you brought up, but we refer to, from here on to that red area could be in play. And how do you protect yourself? Options, right?
That's absolutely true. Just to go back on Christmas Eve, December 24th, that half day, we actually identified a top reversal. Now, we didn't get that confirmed. You can see my little red arrow here. We didn't get that confirmed until New Year's Eve. So it took a little bit of time for us to actually believe that that was the top, that we weren't going to get any higher. But yeah, we stopped just short of the green zone on our move up. Now, we did get into the magenta zone for our move down. We're in the magenta zone now in this move down. The question is will we overshoot the magenta zone and wind up finding our bottom reversal in the red zone, which again will reinforce for us that we're in sideways choppy. If people want to write down some levels, 6,800, that would be whether we know, whether we're getting a move, a pullback move that would be more of an uptrend versus sideways choppy. Getting above 6,800 might hint at an uptrend. Getting below 6,800 for our next bottom reversal would be more sideways choppy. And then the next level is 6,720. Getting below that would signal that we actually were in a trend change again, number 5. So we're going to pay attention to 6,720 if we dip down below that. And then finally, 6,670. If on this move down, if we go all the way down below 6,670, we're going to start thinking about, oh gosh, the floor is dropping out, and trend reversal. We're going to start looking at downtrends, so we're going to pay attention to that level as well. I don't expect that to happen. I wouldn't be surprised if we get below 6,800, even below 6,720, but I think we're going to wind up reversing next in this red zone, just keeping the story going for sideways choppy.
Yeah, and trying to figure out what that catalyst down could be, because looking back the previous weeks, I mean, it could be as simple as, a data center got overpriced by a couple $1 billion, and one of the AI companies gets hit, and it brings the majority of the market down.
That's what
What are you?
that's what caused the risk off situation this week, was a sell off in the 10 AI stocks, right? Nvidia, some of those big players in the AI world sold off this week, and they're such big players. There's so many people here in the States that are betting on this AI bubble. It's turned into a bubble. Everything seems to be overpriced. It reminds me so much of the dot-com bubble from 25 years ago. Yeah, that's what caused today's. That's why I wouldn't say cause, but that is why the markets look like they sold off this past week.
Yeah, and I'm curious as to, like, what's like, I feel like January is going to be driven by the actual corporations and the news coming out of there, more so than what's happening fiscally, because don't we need a new Fed? When does this transition happen? Like, I feel
End
like
of
we got like
April.
a okay, so
So
we've
end
got
of
a whole
April.
quarter.
We got a whole quarter. How many Fed meetings do we have? We have March 18th and probably April 29th. So we have 3 more Fed meetings under the current group. But even if we get a new Fed chief, that doesn't necessarily mean that the Federal Open Market Committee, which is a Democratic organization, is going to change much. So even though you've got kind of the figurehead of the Fed, possibly getting a new focus, that doesn't mean that the Federal Open Market Committee meeting, where these policymakers are going to change that much. We'll see. We'll see.
Yeah, because it's like the whole first half of last year was, we need rate cuts. We need rate cuts. Well, we're starting 2020, so we got our rate cuts. And now it's the question of, do we need more rate cuts? Do we need to just chill for a little bit? And then, the other tools at the Fed's disposal, as you've pulled up, that is usually the counter to them doing anything with the rate on the rate side.
Yeah, I'm just so surprised, because they had talked about 2 Fed meetings ago that they were going to pause quantitative tightening in December. So a pause would have meant, you know, we would see that there would be no more tightening. Tightening is what we saw over the last year. We've actually seen it for the last couple of years. We were up around $9 trillion, and then we've gotten as low as about 6 trillion, 6.525, right? That's what, $6,525 billion, or $6 trillion, 6.525. And now we're back up to, I think this is what, 6,580,000,000. We've started quantitative easing again, and that was not on the tea leaves. So that's kind of surprising to me. It's kind of disappointing as an American citizen to see that the Fed is taking on, basically printing money again. I personally want to see the Fed out of the business, and I want to see, the U.S., cutting unnecessary spending, but even more, growing income. Right? There's 2 ways when you're in trouble. Right? When you've got too much credit card debt, you've got 2 things you can do. You can cut your expenses, or you can grow your income, or both would be ideal, right? So I think that this AI bubble and robotics bubble is going to be critical for the US, because that's growing your income. And I think that, keeping a leash on spending is going to be important. But also, you kind of want your creditor, the one who's, especially, the biggest creditor of the US are the U.S. people. I think the U.S. people, when we buy treasury bonds, and that includes, I'm grouping in with U.S. individuals, I'm grouping in hedge funds and mutual funds and pension funds, which also own a lot of debt of the U.S. That's something like 21 trillion of the debt that the U.S. currently has. So that's the biggest creditor. And then the second biggest creditor is this Fed, right? The Fed. And then the third one is other countries like Japan and China, right? Are the big holders. Saudi Arabia is a big holder of U.S. debt. But this Fed one, right? The way that the Fed is a creditor, the way that the Fed buys bonds is by printing money. The rest of us, use money that's in circulation to it's just the Fed being one of our creditors and using fake money to buy our debt is not a good situation, in my humble opinion. And I'd like to get the Fed out of the pool of creditors for the U.S. debt.
And do you think that many others feel the same way, which is why they're diving so much into gold, which continues to be a sitting at these all-time highs?
And I intentionally, usually I'm looking at 3-month charts when we're on this show, but I intentionally today, because it's the beginning of the year, wanted to look at 1-year charts. So look at this, 1 year ago, the price of gold was at $2,650 an ounce. And, last week it hit $4,500 an ounce. And this week it's around 4,340, 4,380, somewhere around there. It's been bouncing in that $50 range. I'm just so surprised at how much investment dollars are going into these hedges. I mean, look at silver. Last year, silver was at $30 an ounce. And if you look back over time, about $20 to $30 is where silver has lived for literally decades. And now silver has spiked up to about $72. Last week, it hit a high of about $78 an ounce. I can't even believe it's silver of all things.
And it's one of those where it's not necessarily being used as the commodity itself. It's more the
silver definitely is. I mean, it's not like a copper or even a platinum. There is, an industrial use for silver more than for, say, gold. Gold maybe could be on some semiconductor leads or something like that. But this uptake in value is because people are using silver as a store of wealth. I think that what this tells us is that not only are big money investors who can afford gold, right? Not only are big money investors worried about, the future and are therefore hedging, but little investors that maybe can't afford an ounce of gold are looking at, something. And so I think this is a telltale sign that it's not just the richest of the rich, the people who are typically investing. And a lot of people are saying to themselves, I need to invest in something solid. I can't afford $4,500 an ounce. Give me something else. And so they're like, give me some silver at $70 an ounce. That's where I'm going to hide all my money. It's basically people deciding that the banking system isn't safe and they're going to bury money in their backyard. In this case, they're going to buy a precious metal.
And then it looks like Bitcoin, which is kind of like that hybrid of risk aversion. Who knows what the cryptos are actually connected to these days? Because I mean, I'm looking at 4 different markets all over the place. So it seems like still a holiday trade is on. But a little bit of appetite there for Bitcoin today, and then oil. I mean, I'll be honest. I saw a lot of social media this week about people talking about how cheap gas is and being very happy about it.
Oh yeah. I'm for sure. Although, I'm using mostly electric chargers now, but it's crazy how inexpensive the oil is, and we're seeing that at the pumps, but I don't think people are seeing it in their energy bills. So, in the colder parts of the states, a lot of us rely on oil, we rely on natural gas, we rely on propane. I mean, these prices are through the roof. I know, I even looked at my energy bill, and it turns out that, I've used less, we've gotten smarter with our smart thermostats and stuff. So when we compare last January and last December and last November to this year, we're doing much better at how much energy we're consuming. However, our bill has been a few dollars more. So we're using less energy, but we're still paying more. And I think people are noticing that. And the question is what is that disjunct between why are we paying more even though we're conserving, and that the price of oil is so low? So I think that people are kind of confused about that, adding to the confusion. And in addition, I think there's confusion around, a lot of folks pushing for, drilling, and we should. I have to tell you, with the economics of oil being down in the mid 50s, there's not going to be any new drilling going on. In fact, at this point, you get much lower than $55 a barrel. If you get down near the $50 a barrel mark, there's not going to be, people, domestic oil producers, not just here, but in all parts of North America, will probably start slowing down their pumps, turning the pumps off, because it costs more to pump out the oil than the oil's worth. So we got to
Yeah.
watch out. We got to watch
Yeah.
out.
And if anybody's interested in kind of learning more about that, Landman on Paramount Plus, I'm telling you, Billy Bob Thornton is the guy going from rig to rig saying, well, the oil's under 60. Well, there's not even a point for us to do anything here, right? And
Yep.
56 seems very low, because I remember it being as high as like 130, at
Yep.
some, it like within, recent memory.
Yep.
And that's, a 3x difference. And so,
Yep.
a lot of people are attesting this to the Trump administration, and who knows how much effect that is having, but it's definitely not the alternative of hurting our pockets. So, not so much impacting the overall market these days, right?
Not really.
Yeah. All right. So then,
Should we look at the VIX?
oh yes, last part, the VIX. Every time I see it under 15, I think about you, and I'm like, what's going to be the next trigger to like get us through, back up to these 28, 30 levels?
Well, here we go. Let me, because we got to talk about our VIX trade a little bit, because I'm in the VIX trade. I'm going to adjust our indicators that anybody could have access to. You just have to go sign up. SIP will give you instructions on how to do that in a little bit. But we got another signal. So if you remember, there was a signal back on December 11th. And then we actually got follow through on that Monday, December 15th, and my automatic trader wasn't configured correctly, but I did get in on the 16th, right? And then only to have this happen. So I've got shown on my screen the actual strike prices of my spreads, and I can show you that a little bit better. You can see 1450, 1550, 20, and 21. If I show you over here the actual option chart, you can see that a little bit better. So we've got two bull vertical spreads, one that's at the 14 and a half, 15 and a half, and then another one that's at the 20 and the 21. And so what this whole trade is about, SIP, is that, if the price of the VIX on January 21st, when these options expire, is in this zone, this is going to be a break-even trade, which is what we want this to be. We actually want, if everything is normal, for this trade to basically break even. I kind of slanted a little bit by a few pennies, not dimes, not quarters, but a few pennies to the credit side, so that when it is break even, it actually pays for my commissions and pays a little bit extra. But the big story is what happens if the VIX shoots up. And why would the VIX shoot up? The VIX would shoot up if everybody gets afraid, or if everybody gets confused or uncertain, the VIX tends to shoot up. And when it does, you can see that this trade goes from a break-even trade. You can see this zero line, so it's a little bit better than break-even, to max profit. And that's just a great place to be. You can see it goes from this number that's somewhere around like 1920 to well over 100, right? So that's what we want to have happen if something, uncertain hits the market. And when something uncertain hits the market, and you can see that that happened twice before, once in October, once in the middle of November. If that happens again, usually the rest of our portfolio suffers when something like that happens under fear and uncertainty. That's when this trade, called the hedging trade, bails the rest of our portfolio out. Now, the other story is I did get in when we were supposed to, and then at the beginning of this Christmas rally, this holiday uncertainty where you've got just a few voices, we had that risk on, and now we're getting risk off. And people said, hey, the VIX got as low as $13.40. Are you afraid with your 1550 strike prices? I mean, I'm not going to lie, I didn't feel comfortable, but I knew that it's this 2-week period is usually a week that we can basically discount. And I'm pretty comfortable by the time January 21st goes around that if we're not in this middle zone, we'll be back up here, because something's got to give. There's always something in the Trump times where something happens that causes a whole bunch of confusion and uncertainty. So, my probabilities tell me that we're probably going to break even on this trade. The only other thing I can tell you, Sip, is the day before New Year's Eve. So we're talking about Tuesday. We had an end of day signal, as you can see here, that was another opportunity. And I've heard we got follow through on New Year's Eve. We're getting further follow through today. And I've heard that because it's at a lower price, people have been able to buy their spreads lower than I did. So people have been I've been hearing that it's 1350, 1450, or 1415 is where people are buying this lower spread and then finding a matching upper spread. So I'm excited for you guys. You guys are in a better probability range than I am, but I'm not worried for myself. So if you get a better price than I do, I'm not worried for you to have any sort of fears around doing your hedging trade. But that's kind of the status of the hedging trade, and also status of the VIX. It looks like we're getting some more uncertainty in these days.
And access to that indicator is in the chat. Also, we've got it in the scroll bar there. So head on over there, click on the free indicator suite, and you'll get access. And it seems like that was a great execution from a technical perspective for those that have the appetite during the holiday week with the lower volume. But looking further in the rear view, that indicator really popping there is strong. And like you said, as soon as everybody gets back to the office and the Trump administration starts back on their 2026 agendas, we know we're going to see some volatility.
It's almost a given. I mean, the other thing to look at, we established some new lows over this winter holiday, but for the most part, if I go back a year to all of 2025, we had a little bit in the beginning of the year down at 1450, and then we just had this one going down as low as 1350. But for the most part, if you can get your threshold at the $14 to $15 range, that's the lows for 2025. That's the lows for the predictable. And then you can see what the highs are. I mean, gosh, when he announced the whole tariff thing, we went as high as, $60. There's been so many times this year where the hedging trade has paid off. Every time you can see above my yellow lines, these little burps, that's the hedging trade paying off. So, in the past, we put the hedging on with just a certain amount of our portfolio, 5 to 10%, just for those emergency situations. Now we've actually bumped that up. It's closer to 15 to 20% of our portfolio because these little things that induce fear in investors has been popping up more and more recently.
And for those that want to learn a little bit more about that VIX trade, it's something that AJ and the team puts on very regularly, once a quarter, on average, maybe a little bit more here or there.
Yeah.
Uh,
Whenever we
and
get a
and
signal, it's been every month lately.
and it's really a great approach to hedging your overall portfolio throughout the year. So learning how to get access to that is once again in the link there. If you head on over to that quick links page, we've also got all of AJ's socials. Go ahead and show some love. You could register for the free workshop where AJ breaks down some of these premium selling strategies, information about joining the Trading Trainer program, where he's got that mentoring session every Thursday that he talked about at the beginning of the show, and then one-on-one coaching. Sometimes these things you just need a little bit more attention. So AJ's got a wonderful coaching program where you can learn more about how to get involved there. All right, so New Year's, that's kind of what I closed myself out there. New Year's, I was kind of like you, AJ. I was not excited to get out there and about. So I participated at home. But there were some pretty big storylines that came out overnight. Just heading into the new year. And so that's what I've got for my morning sip, and I'd love some of your feedback on this. On a positive note, I don't know. President Trump was having a Mar-a-Lago New Year's party, and I guess there was an artist in the crowd, and he was like, "Hey, paint a Jesus," and she painted this giant Jesus, and then they basically auctioned it off, and all the proceeds went to, I believe, like St. Jude's Hospital or the sheriff's department. And I thought this was similar to kind of the thing that you did the other day for the Kidney Foundation. And so that was a positive news. AJ, what are your thoughts on this final product here?
I mean, I don't know what the dude looked like. He came from the Israel side of things. He probably was a little bit darker skinned, less tan than that, less orange. It is interesting that he came out orange, just like Donald Trump is oftentimes orange. Um, yeah,
As
it's
a as
cute.
a art as a art investment, I think it sold for 2.75. That could have some
Million.
yeah, that could have some value in 50 years. What do you say?
I mean, unless it goes the way of like all those NFTs from about 5 years ago that went for
Uh,
that much money
hey,
that are now worthless.
there are those unique tax incentives to owning art, right?
It's true.
I
It's
believe.
true.
All right, the other one that caught my attention was Paris. I feel like we didn't have in the US, in the States, that we didn't have any big drama out of any of the New Year's Eve events, but in Paris, there was a record, I believe, like over 1,100 cars were just burned in the middle of the streets. And so rather than firing fireworks, I believe they had Molotov bombs or something, and they were just launching it at cars. I don't think this is good for anybody. Did you see any of this?
No, no. In fact, I haven't. This is the first I'm hearing it. Do you know why? Do they know why?
No, but it happened in, I believe, Antwerp, in some places in Germany. A lot of violence and vandalism. So uh maybe it's politically driven. The other one that was kind of sad was this big fire that happened in the Alps. Did you see any of these news headlines?
No.
So there was this club, right? And so, basically they had a shot of the streamers, and the roof catches on fire, and there's no fire extinguishers, there's no exits. But really what kind of bothered me out of all the footage that I saw was these guys filming from outside, and not like actually going and helping
Not
the
helping.
people. And I'm like, is this what our current generation, is this how we think? Is like, I'm gonna get the shot instead of helping all these people that are just trampling on top of each other. So I felt like that was kind of a sad story, but you know, if there's a way we could encourage people to do good, is put the phone down and go help people get out of the
Yeah.
fire, because that was very sad to see. I mean, the numbers were up there. It was kind of the saddest event from New Year's. But you know, oh, let's end it on one more positive one. So this one
Is this one Moscow?
No, this is in Japan. One of the world's largest fireworks launched in a single 1.2 meter projectile. So biggest of the year in one shot, and boom.
I wonder when I gotta say, is it gonna turn into, are fireworks gonna, there's the line between fireworks and full on like military bombs is getting closer and closer.
Well,
That
thank
thing was
God
huge.
in LA it was pouring all day. So we literally had no fireworks because it was raining more than it does. So we didn't
Yeah,
have any of
I
that
would
problem.
be afraid to have fireworks in LA. It's oftentimes so dry, you might catch something on fire.
That's a problem. Well, when the
But
Dodgers
Sip,
won,
you didn't mention the whole Moscow thing. They woke up on New Year's Day with no electricity.
what, Moscow? I didn't see any of those headlines.
Oh, yeah. Ukraine went Richter. So, you know, Ukraine's got these very inexpensive drones that have been doing so much damage to the Russian military complex. And Moscow, of course, likes, from what I understand from the reporting that I follow, they love to do their bombing barrages on Kiev and on Ukraine on holidays, right? To kind of keep the fear in the Ukrainians. And the Ukrainians decided this time around to send 3 swarms of their drones and took out all of the infrastructure of Moscow. So all of Moscow was in the dark come New Year's Day. And so I thought that was significant because, you know, Moscow is spending a fortune on this war. I think that it's come up to $2 trillion that they've spent in the last 4 years. And the Ukrainians are going, you know, down under dirty, you know, with these $10,000 drones versus $40 million missiles that Russia is lobbing their way, and are just like obliterating. They just obliterated a huge radar complex about 2 weeks ago on the Crimean Peninsula. They are just, and they sunk the Russian fleet. There was a feared Russian fleet in the Black Sea. Most of it has been sunk. The rest of it has been like retreated to a port. I mean, I'm just really, after 4 years, you would think that this small country of Ukraine would be decimated, and instead they are just like down and dirty, man. And you know, the Europeans aren't helping, really. The United States isn't helping. They're just like figuring out what to do. They are just not giving up, and I'm quite impressed, especially with turning the lights off on Moscow.
Yeah, and it's freezing cold there, by the way. It's like negative 10 degrees, and you know, all the
I
stuff's
can't
going
even
out.
imagine.
Yeah.
Ugh.
Well, I'll definitely look into that post show, because you know, I think my feed's been overwhelmed with Somalian fraud more so than the Ukrainian war.
It happens.
But that's something that we won't talk about in this episode. We'll see what pans out in 2026, because I'm sure there's going to be some more news coming out from that fiasco. All right, folks.
So.
With that being said, we're going to dig into some specifics. We've got AJ's pick of the week. We've got our speed round. AJ's going to use his fancy tools and his 25 plus years of experience to break down some opportunities. And
for those people who stay on the show all the way to the end, I've got a little bonus for you guys. So stay tuned.
All right, folks, sit tight. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
It's so weird having this show after a 2-day holiday because I feel like it's Monday. Like we just had the weekend and today is Monday and tomorrow's Friday. But yesterday on Monday we had football all day. You know, the holiday trade is still on.
It's confusing you. Yeah. Right on.
All right, so we did talk a little bit of oil, which brings us to your pick of the week today. You're looking at let's get this view right here. You're looking at Transocean, ticker symbol RIG. What are you liking with this setup here?
Well, and I don't usually do this, but I stole this one from the users at the paid program. So this was our pick of the week yesterday in our program, but it has so many cool things about it. I wanted to make it my pick of the week for the general public, and I don't think the users would mind. So Transocean, you can see it here we've got our little explanation here with our Transocean here, but they're the folks that do some drilling in especially for oil rigs. They're the ones who kind of get involved with organizing that, usually under the guise of a company like Halliburton or something like that. And then once the rig is all constructed, they turn it over to like a BP or a Chevron. And the scoop is I think there's some excitement about Transocean recently because there's been very little, especially after the pandemic. There was so much focus on renewables that Transocean lost a lot of its vigor. At the end of the 2010s, 2018, 2019, Transocean was at a high. And then, there was so much focus on renewables and nobody was drilling deep wells anymore, things like that. But I think with this whole thing happening in Venezuela, where it's turning out possibly that one of the main goals of this is to be able to get U.S. companies back into the Venezuelan oil fields, which that's some of the best oil out there, along with Norway and some of Saudi Arabia. It's not any of this crappy oil that comes from us or from Canada, that's mostly asphalt. It's sweet crude. I think that, investors are looking at rig. So I am too. And what's cool is this is in penny stock range. This is under $5 a share. But what's also cool about it is if I pull up the Transocean in our options lookup, even when you start to go out to where we would buy protective options, it's trading every 50 cents on strike prices. So what does that mean? It means we've got a lot of flexibility, even at this low dollar figure, to create the strategies that we want. If we trade between $4 and $4.50 with our strike prices, we pretty much encompass the price action. Now, I'm actually somewhat, at least in the medium term, bullish on rig. So I don't want to go and short rig. I don't want to buy puts against rig. I would rather be in the long position, buying rig the stock or buying calls as my initial covering position and then trying to do equity. And where we are right now, we're just about out of the range. We had gotten our signal back on December 22nd, and we got some follow through on the 23rd, if not on the 29th. So we're about 3 or 4 days late. I mean, if you can still get it, if you can, if rig has a little bit of pullback in the next couple of trading days to get it below about $4.15, better below $4.08, I would be more excited. I mean, the key here is what we're doing is we're legging into a covered call, or we're legging into a diagonal spread. And so long as you get just a little bit of difference between where you do the first leg and where you do the second leg, you're going to do better than if you just did a buy right. And that's really what our game is, why we leg in. By legging in, we can improve the reward characteristics and also improve the risk characteristics of the covered call, of the diagonal debit spread. So, it's a little bit late. I like to buy it when it's in the lower half of the channel and then do the other trade in the upper half of the channel, ideally right after a bottom has been found and right after a top has been found. But if I put any sort of delta in between there, I'm going to better the characteristics over the normal, which is a buy right. A lot of I know I just threw a whole bunch of word salad at you. I think there's still time to be able to go long. If not, I want to let rig cycle. And again, my initial position, the covering position, I don't want it to be a short. I don't want it to be a put. I want it to be a long or a call. Ideally, I would get it in this lower at a price in this lower target. But I think this is one people want to focus on big time. And I've got a substitute option. I think you could use, and again, it depends on, when you get into this trade, but I think you could use, instead of using just the stock, which by the way is dirt cheap, 100 shares of this is only $422 right now. I mean, that's a great price for having an initial covering position. But I think you could use the September or the December or the January 2027 $2 calls and get pretty close to having an option substitute. And now we're talking about, instead of $422 for 100 shares, you're talking more like something like $225. So a little more than half the price. So if you want to do some leverage, there's that too. I'm excited about rig for the month of January. So that's where we're at.
Yeah, I mean, I was going to mention the price point because sometimes we talk about stocks that are like $180. So to see
Yeah.
a nice setup with the 4 is a great even paper trade for anybody that wants to, follow along
For
and
people with
test out.
small portfolios, Sip, this is the ideal candidate.
Yeah, and oil is one of those things that it'll pick up at some point in the future. So, the risk is a little bit more in your favor. All right, cool. That's AJ's pick of the week. Trans Ocean, ticker symbol RIG. We've got our speed round with 3 quickies for you, AJ, to get your feedback. So we'll start with Beth out of Monterey, California, who wants to know what's going on with Comcast, ticker symbol CMCSA. I believe they were trying to bid for Warner Brothers too.
Yeah, well, they've got to do something because they've been on a real downtrend. I just think that people are cutting the cable big time. So these companies like Verizon and Comcast, who have relied a lot on, and Verizon, I'm talking specifically about their Fios business. There's so many people who are just going full on mobile. And if these guys, don't keep up and keep innovating some way, whether it's through merger and acquisition or through, in-house technology. So, okay, Comcast has bottomed. It bottomed in the beginning of November, and then something happened. So, Beth, I think I would ask you to try to figure out what happened in the middle of December to cause Comcast to jump up. I'm not sure whether we're hitting a top or a bottom. So Beth, I'm going to ask you, earnings is not far from here. So maybe we turn this into an earnings trade. But here's a case where I'm going to say, let's not do any trades right now. Let's observe and let's find out if $30 is going to be where we establish some short-term or even medium-term resistance, and then something like 26.5. If that gets tested as support, I could see going long at 26.5. I could see going short at 30, but not this time. I'd like to see it test those levels more. And then maybe as earnings season kicks in at the end of January, maybe we look at Comcast as an earnings play. I'm looking back at some of the different earnings announcements. Actually, I'm not sure. Comcast, the investors tend to really pay attention to earnings and either give Comcast, actually, for the last 4 earnings, they've really not liked what Comcast has been saying, and they've been taking it out on their stock price. So I'm not even sure it's a good earnings play. It's an interesting candidate, but I think I'm going to pass on everything on Comcast except for observing.
I will say that their Peacock network platform is very comparable to Netflix. I mean, in terms of like usability, user interface, and they have the sports angles. So I don't think that they've necessarily lost in that respect from like a content. They just need more shows, like but they still have that traditional outlet with the networks, and I don't know, it might almost be hurting them at this point.
What's the
Uh,
status of you brought up the Warner Brothers, and so the history, we talked about this a couple weeks ago. Netflix made the initial, and they were going down with a Netflix purchase, with Netflix being the technology company, would probably dismantle some portions of it, incorporate some of it, maybe try to sell off the assets that, like a technology company would. But then Paramount came in and has been trying to do a hostile bid. And now you also mentioned Comcast. Do you know what the latest status is?
Well, it's like that episode in Wall Street, the movie, right, with Gordon Gekko. I think they're at the stage where they got to do some sort of voting with the shares because of the hostile bid, right? Like
Yeah,
it, and it needs to be approved by, I think, the DOJ, right,
sure.
right. So because of the holidays, that might actually be a hot topic next week.
Okay, yeah, because I do know that they sent out something to the shareholders saying it would be better if we were acquired by Netflix rather than Paramount. Um, but Paramount was offering the shareholders more money, so you never know what the shareholders are going to vote. But it would be interesting because at first everybody was like, "Let's go Paramount." It might be a better, but now people are leaning towards Netflix since Paramount kind of has been doing. Paramount's not been getting very good press with the way they treated Stephen Colbert and all that stuff, and now they cut out like a 60 minutes thing that aired in Canada, and of course if it's on air it shows up on YouTube, and so people are like, well, why are you getting why anyway? It's so drama.
The hardest part is being like an NFL fan because you literally have to have like 9 different networks to stream your games,
Sure.
and Peacock being one of them. All right, Comcast from Beth, thank you very much. Moving on to our second name, Sam out of Boca Raton, Florida, wants to know your take on Mara. This is a name we've covered a few times. Mara Holdings, ticker
Sure.
symbol MARA.
Mara Holdings, they're basically a Bitcoin company. They invest in Bitcoin and things like that, and not only just the buying and selling of Bitcoin, but I think they've also been somewhat of a mining company in the past, based out of Florida. I could see why, Sam, you might be interested in that. Um, let's look at the last year of or even the last 2 years. So Mara has been a good company that we've been able to make money on through sideways choppiness. You have to, with this one, it's about managing the trade, right? Because the strike prices have been moving around anywhere from like the $15 range all the way up to the $30 range. So you got to kind of ride the trade and pick your strike prices as each top and bottom is found. But now, gosh, we're down at under $10. And Bitcoin, there's questions about crypto right now and whether, what the story is with Bitcoin. I don't think you want to count Mara out, but Mara's probably got a rough 2020. It's too late for us coming back into the short duration. It's too late for us to short Mara. But I'm not sure I want to advise, and of course I can't advise. I'm just an education guy, but I don't want to even consider for myself to say to go long. I think what I want to do is I kind of want to wait for Mara to give me a new high, and hopefully the higher the better. If I can get up here in the $15 range, that's where I'd want to be, and then get a clear top signal. I might use an even more lagging signal than my MACD on VWAP. I think I might the 3 and 5 day EMA, what we tend to evaluate the broad market with, to make sure that that top is secure. And then I might, in the medium duration for the 2026, I might set up an initial covering position that's a short on Mara, or instead of a short, we could buy a deep in the money, far out in time put option on Mara, and then, trade the premium trade on that. So that's, again, in the beginning of the year, it's also hard coming off of these 2 weeks of quiet trading, low volume trading. It's hard to know what to tell you, but I don't think I want to go long Mara right now. So I'd say just observe, just like I said to Beth from Monterey on Comcast, let's observe and see if we can't, short Mara at its next high.
Yeah, I do see some of that correlation to Bitcoin, just even over the last, 2 months or so. All right, Sam, hopefully that was helpful. Give you a little bit of insight on Mara. Moving on to our third and final name, Sebastian out of Santa Fe, New Mexico, wants to know, is there a play in Kinder Morgan, KMI? This is the pharmaceutical, right?
Yeah. And Kinder Morgan is a defensive play for a lot of folks because they're such a stable, profiting company. I mean, they've been around for a while. You can see all of 2025 here in the same range. This is one of our dream premium selling, and their earnings is a little bit off October, November, December. We've got a little bit of time here before the next earnings. Let's see, when was this one? This one was last year. It was on January 22nd. So we got a couple weeks here. And actually, when you look at what happens during earnings, well, this one actually, Kinder Morgan has a little bit, but it stays in the channel. So you could probably weather this. A lot of times in our premium trades, we go to an all cash position right before earnings, let the earnings go through, and then, reestablish our premium selling position for the next 3 months. But Kinder Morgan's forming a top here. They've been in this channel since the beginning of 2025. I wouldn't be remiss to tell you that you could probably at the top short some Kinder Morgan or short. Let's see if there's a substitute option using our options lookup tool here. KMI. There it is. Do I have it set up? Let's set it up here. Let's go to, I just want to look at monthly and leaps. And then let's find a viable equity substitute. Let our little AI tool help us determine a good substitute, maybe December. Yeah, there you go. $13 call. Looks like it meets our criteria. Actually, I'm talking about puts. Let's look at September, see if the AI finds anything. Not really finding anything. Let me look here at some of the measurements. 1.1, 14.23. Oh, I like, no, I don't like that. I lie. I like this $40 put. It's going for $12.65. So if you don't want to short this thing for $27.50, you could buy that put. The put that I was looking at again is the December. You could also do January of next year. I'd be okay with January of next year. Actually, the $35 put expiring in January of 2027 has some good stocks. And this is even cheaper, $7.93. So, there's some substitutes if you don't want to short the stock. I would wait for the top signal, which isn't here yet. I would wait for my magenta arrow. The higher it gets, the better. And then go from there. I could see getting into this even in the next couple of weeks ahead of earnings to see what we can do with that.
Yeah, I have a suspicion that the healthcare industry, healthcare names are going to be in for quite a roller coaster here to start the year, just because of the debate and even just to close out the year. I don't know if you saw, President Trump bring in even the CEO of Kinder Morgan in and make them lower their prescription prices. And it seemed like that was just going to be the start. So I could see that having some effect over here in these names. So hopefully that was insightful, Sebastian. Run with it and see, if any of those strategies work for you. I know you had a surprise, AJ, but do we have time to run through it, or do we want to save it?
I'm just going to announce it really quick. I gave a presentation, like you mentioned, for the American Kidney Foundation on Wednesday. Wednesday, New Year's Eve. And it was a very simple presentation about why people should be buying stocks with cash secured puts. It's something we talk about all the time on this show. But ahead of this, I had been working on for months now on a prompt for our language models. And I'm constantly tweaking it, but I just want to let you guys see the prompt that I've been working on. It's a 2-page prompt, and you load this into like a Chat GPT 5.2 or a Claude. I like those two in their thinking modes. And this has been so good at finding stocks that not only can you do the cash secured put deal on and make money in the short term, collecting the premiums on the cash secured put or buying the stock at a discount, but it also is finding those stocks that you might want to have in your portfolio for longer durations, like, a 6 months to a couple of years or even longer. And so I just want to let people know that we're coming up with prompts for the AIs that we'll probably be making available to you guys in the not too distant future. So if that's interesting to you, I'd love to hear either in the chat or if you're watching this replay to comment to some of those and let us know what you think about having these AI tools help you do their screening process.
Yeah, I'm learning. I think both of us are learning firsthand the art of prompting itself for any task, any workload is going to be a very unique skill set moving forward. How can you use these tools to better, and with options being a somewhat complicated process at times, can you have some of these AI builds ease it along with the guidance of you kind of building the structure out. So we'll keep everybody posted on how to get access to it. I think this week you and the team will be figuring out where people can sign up and whatnot, and maybe we'll run through an example next week in one of the examples,
a real-time example. Why not?
Yeah, that'll be a good idea. Otherwise, it's still pretty quiet here, on the street today. People, I don't think are completely back into the office. I was heading back to LA and I ran into some people in Chicago. They're just heading off to vacation. So it's still going to be a quiet day, but starting next week, Monday, Tuesday, we should start to see some normality. AJ, final words from your perspective heading into the new year.
Yeah, be open. Don't be so excited about these last 2 weeks. Be open to what's going to happen in the month of January when these traders come back, and make sure that we're doing our volume validation on any of our signals, because, without volume being the great validator, we may get, false positives on our signals.
And with that, feel free to show some love. Hit that like, hit that follow, hit that subscribe button. We do appreciate you guys tuning in. If you have any questions, head on over to tradingtrainer.com. Leave a comment in the chat. Send us a DM on whatever platform you might be watching this on. And we look forward to seeing you guys, in the community, and having a wonderful 2026 in terms of your investments and your strategies and your portfolios, utilizing all the tools at your disposal to put you in a good position. AJ, with that's all I got. Appreciate your time. Appreciate everybody tuning in. Have a good weekend.
Happy 2026, everyone.
We'll catch you guys next week. Adios.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe